Hey, what's up, guys? My apologies for such a late weekly Outlook video. I've been traveling home for the Thanksgiving holiday. Friday is when I flew in, and then Saturday, Sunday, I was just running around, meeting up with friends, and just couldn't find a time to sit down and do this. Um, I almost sat down last night at like 11:30, but then decided I was so tired that I should get some sleep and give myself the chance to make a better quality video than at 11:30 at night. Um, my I did bring my mic home that I usually do, but I hope it's not broken. It's acting kind of finicky. It's like just staticky. So I'm doing this on my headphones. If the quality is a little shitty, that is why, and I also apologize for that. But let's get into this. This is the dollar. As you can see, we've been targeting sell side liquidity since we came up and tapped into this order block. We are below this daily fair value gap that we used last week as a target. So what we're going to do this week is we're going to see if we want to either retrace up and use it as an inversion, or if we just want to get really heavy and continue to this sell side liquidity. Those are our two options that we need to pay attention to. If we go down to the 4 hour, I drew out the fib on this 4 hour wick over here, as you can see. So this is that fair value gap we were talking about. This is this large wick, and I'll be specifically paying attention to the consequent encroachment of it. If you notice this down close candle right here, I drew out this as a bullish order block. You can see it lines up pretty closely to the consequent encroachment, but just watch where we closed if you scroll over. So you can see we wicked through it twice and then laid a body right on top of that order block. So price is being sensitive to it. I want to see how we treat this order block level and this consequent encroachment in the next few days. If we start closing candle bodies below in the lower 50% of this wick quadrant, I will be expecting the sell side down here, but let's focus on how price prints around this order block and this wick. Again, if we start to retrace, I'll be looking to use this as an inversion, and then the next level after the bottom of this is the consequent encroachment. So those are the levels that we'll be playing off of. Let's go to ES on the daily. If you remember when we did the quarterly, that's NASDAQ. If you remember when we did the quarterly shift video, we mapped out this high, that objective was reached, and next is this high. So I do think we're going to take these highs. We have FOMC tomorrow, so I think that'll be a great catalyst for manual intervention to kind of send it up here. I will be careful, don't trade during FOMC. That's not a good idea. The best bet is if it's in the morning, trade in the afternoon. If it's in the afternoon, if it's at 2, if it's in the afternoon, see how trade in the morning. I do think we'll take these highs. I know this video would have been a little more beneficial prior to today after this long range day, but after having such a long range day and moving so far away from the new week opening gap, I believe that it's showing that it really wants these highs. So notice how we opened the new week opening gap and just had a very bullish day above those. So I do think it will want to take those highs off of FOMC tomorrow. Let me check on the economic calendar because I want to see the time. It's just the meeting minutes. So it's not like a press conference. FOMC meeting minutes at 2 p.m. Okay. Yeah, I'll probably see how price is in the morning. I've traded the mornings of that and found decent price. I would not be in a trade come 2, but after 2, I think we might be able to look for something. But yeah, I think these highs are definitely in play. And then when we do get above those highs, we'll have another conversation on whether we're going to go up into these levels, this fair value gap and this volume imbalance and these highs. But let's focus on getting to these highs first. I will say, be very careful trading this week. Being a holiday week, this is what we have to think of. So if we're trading under, what ICT says is the algorithm, with that concept in mind, you have to think in the U.S., large funds, hedge funds, the people that, are, that the algorithm targets their orders, they're going to be on vacation, definitely Thursday and Friday. So you could, in a more traditional sense, we're going to say there's going to be less liquidity in the market, less volume. So if there's less volume because these hedge funds are on vacation, then the algorithm will not be as volatile. It won't be as volatile because there won't be such a large inflow of orders that need to be paired. So remember, the algorithm moves from liquidity to inefficiencies to match buyers and sellers. So if we have low volumes because the hedge funds are, taking vacations, then there's not going to be as many orders that needs to be matched, and we're not going to see as much movement and runs to liquidity. I think that's relevant, especially to Thursday, Friday. I would not try and trade after Wednesday afternoon or after Wednesday morning. I wouldn't try and trade. So just be careful, chalk it up as a holiday week. There's no reason to hurt yourself when next week is back to normal business. So again, yeah, difficult week to trade. Definitely be careful. Size down. We're targeting these highs. Go to NASDAQ, same story. So these are those highs on NASDAQ, but well, in relationship to market structure, but in relation to draw on liquidity, we're looking at these highs. So when we do take those highs, we actually did lay this candle body right here today. Our high was above this high. Today's high came in at 16,116.75, and this high where this buy side is 16,115. So we went over it by about almost 3 ticks. I do think we want to continue above it and take this high. And I think tomorrow will be the day where that happens. Going down to the 4-hour. I could see us dropping into this 4-hour order block before sending it higher. Maybe touching the top of this wick. I will do a breakdown of like kind of going further below the 4-hour tomorrow when we are trading, but just for the weekly outlook and plays, we're targeting upside. If we do target downside, understand that it'll be a scalp to probably like an internal range liquidity. It will not be trying to catch the daily range. Again, like we might find a setup to the downside where we're trying to enter into this 4-hour order block, but the real trades that we're trying to take, and if you're really trying to be selective, upside trades are what we're going to be looking for. So I think I was doing that last week. If you were watching our trade videos last week, I was saying I'm not too interested in downside, I'm only interested in upside, and that panned out to be true. Go to the ES 4-hour, kind of a similar scenario. We got this 4-hour fair value gap. I'd be interested to see if we can come in and take that. But we will be looking for longs to get back above this high, target these highs. Thank you for watching, and Enjoy your holidays if you're celebrating holidays.